What's up, crypto crew? Get comfortable, because today's episode is an emergency briefing for anyone who wants to understand what's happening right now in the markets, and most importantly, how not to lose money but actually profit from this chaos. Today, we're witnessing a historic event. The cryptocurrency market has entered total fear mode, while precious metals are in crazy rally mode. Bitcoin has crashed to a new yearly low, Ethereum has fallen into a classic bull trap, and gold and silver are hitting record highs that even the most bullish analysts didn't predict. In this video, we'll break down why Bitcoin dropped below 87.0 and where the next point of no return is, how Ethereum became a trap for $600 million in institutional investments, which altcoins surged 100% plus while the market bleeds, why gold shot up to 4,966 and where it's heading next, how Trump and the Fed are creating perfect conditions for crypto carnage and a metals boom. Section 1. Bitcoin collapse. Below 87.0 and technical breakdown. Let's start with the main event, Bitcoin. Last night, BTC briefly dropped to 86.0, a new 2026 low. Yes, it bounced back to 87,700, but that doesn't change the picture. Bitcoin's monthly return is now 0.5%, and from the 97.0 peak we saw on January 14th, the loss is about 11%. What does this mean technically? Key support is now in the 86,088,500 range. If this zone breaks convincingly, the next target is 84.0, then 80.0. To resume a bullish trend, Bitcoin must close above 91,593.0 and hold those levels. Why did this happen? Three main drivers. First, geopolitics. Trump isn't joking. His threat to impose 100% tariffs on Canada over its China trade deal creates risk of a full-scale trade war. When global trade collapses, investors flee to safe havens. But crypto isn't yet seen as protective. It's seen as the one risk asset. Second, Fed pressure. The Trump administration is systematically hacking the Federal Reserve. Investigations into Fed spending, threats to replace Powell, demands to cut rates. Markets currently price only a 4% chance of a rate cut in January and a 96% chance of rates staying at 3.75% This means no cheap money. But while rates stay high, crypto suffers. Third, ETF outflows. Spot Bitcoin ETFs in the U.S. lost $1.33 billion last week, the largest outflow since February 2025. BlackRock's IBIT led with outflows of about $537 million. When institutions run, the market doesn't rise. Section 2. Ethereum bull trap and institutional capitulation. If Bitcoin is the ship, Ethereum is the anchor dragging it down. Today, ETH trades around 2,864 to 880, down 2.6% in 24 hours and 13.45% year over year. But the main thing, this isn't just a drop, it's a classic bull trap. How did it happen? In mid-January, Ethereum broke out from a strong inverse head and shoulders pattern. Thousands of traders saw a buy signal, institutions poured in hundreds of millions, and price surged toward 3,400, 3,500. But there, it hit a 4 billion wall of sell orders at that level. This wall broke the bullish scenario and turned the breakout into a bull trap, a trap for bulls. Institutional capitulation. Ethereum ETFs lost $600 million last week. Large whales, while accumulating plus 1.04 million ETH3 billion, couldn't offset the outflow. When funds sell, price doesn't rise. Key levels. Support is 2,772, 800. If broken, next target is 2,400, 2,500. To recover bullish structure, ETH needs to reclaim 3, 46, then break 3, 183, 480. What does this mean for you? If you bought ETH on the breakout at 300, 400, you're now down 15-20%. This isn't a temporary correction. It's a structural breakdown. Wait for a close above 3,500 before considering a new bullish trend. Section 3. Altcoin selective surge in a bloody ocean. While Bitcoin and Ethereum bleed, some altcoins show fantastic gains. This isn't random, it's capital rotation seeking alpha returns. Leaders. INSO. Surged 69-80% in 24 hours, reaching 2.4. ZKC up 70%. NAM skyrocketed 115%. AXS rose 41%, then fell 17%, showing extreme volatility. Why are they rising while the market falls? Because they're microcap with low liquidity. When big players exit BTC and ETH, some capital flows into small altcoins, creating local bubbles. This isn't a trend, it's speculation. Major altcoins. Solana fell 4.4% to 126, losing stability. XRP dropped 1.5% to 1.89. Despite Trump's Davos meeting with Ripple CEO, the market doesn't believe in a quick ETF launch. ADA Cardano, down 3.2%. Bottom line, if you're not a professional trader with algorithm access, don't chase altcoin pumpers. It's a retail investor trap. Section 4. Precious metals, gold rush, and records. While crypto crashes, gold and silver are making history. Today, gold hit $4,966 per ounce, a new all-time high. Silver rose to 99.2, also a record. Platinum hit a high of 1,242. Why is this happening? 3 drivers. First, dollar devaluation. When Trump pressures the Fed and threatens trade wars, investors lose faith in the dollar. Gold is a hard asset that can't be printed. In 2026, the DXY dollar index is weakening, and capital is fleeing to gold. Second, geopolitics. The threat of 100% tariffs on Canada, trade wars with China, and Fed uncertainty create demand for safe havens. Third, central banks. In 2025, central banks bought a record 100 tons of gold. In 2026, the pace hasn't slowed. When governments buy gold, the price rises. Forecasts. Global data revised upward. Expects gold at 6,100, 6,700 by end 2026 plus 30-40, 5% from current levels. In a sharp risk deterioration, growth to 7.0 is possible. LBMA, London Bullion Market Association, forecasts an average annual price of 4,742, the most bullish forecast in a century. Silver could reach 175,220 by end 2026 plus 87, 135% from current levels. The silver deficit is worsening. Industrial demand, solar panels, EVs, is rising while supply can't keep up. What does this mean for crypto investors? Gold and silver are a hedge against your crypto portfolio. If you have 70% in BTC and ETH, you should hold 10-15% in gold. When crypto falls, gold rises and softens losses. Section 5. Macroeconomics, Fed, Trump, and geopolitical chaos. Now let's discuss what's driving all markets' macroeconomics. Today isn't just technical analysis. It's a geopolitical bomb. Federal Reserve. The January 27-28 meeting will likely keep rates at 3.75%. Markets price only a 4% chance of a cut. This means no cheap money. But the Trump administration keeps pressing. Investigations, threats to replace Powell, demands for rate cuts. This creates political risk for the dollar, but with high rates, crypto suffers. Trump in Canada. On January 25, Trump posted on Truth Social, "If Canada makes a deal with China, they will immediately receive a 100% tariff on all Canadian goods." Canada and China agreed to cut tariffs on Canadian canola and increase quotas for Chinese EVs. This is a direct hit to Trump's isolate China strategy. Consequences: trade war, dollar weakening, gold rally. GameStop and institutions. GameStop transferred 710 BTC, $420 million to Coinbase Prime. The market sees this as preparation to liquidate the position with a potential loss of $85 million. When major corporations sell, it's a market signal. Section 6. How to profit from this chaos: strategies and tactics. So, what to do? Here are concrete strategies for different investor types. Strategy 1. Conservative investor, protection portfolio. 60% gold and silver, buy on dips to 4,800 gold and 90 silver. Targets 500 plus and 120 plus by year end. 20% Bitcoin buy only on close above 93.0. Stop loss below 86.0. Target 120.0, 130.0. 10% cash for buying dips. 10% Ethereum only if it returns above 3,200. Strategy 2. Aggressive trader, alpha capture. Short ETH on break below 2,770. Target 2,400. Stop loss 2,900. Long gold on dips to 4,850. Target 5,200. Stop loss 4,750. Scalp altcoin pumps. Buy INSO ZKC NAM on pullbacks with 5% stop loss and 15% take profit. Only 2-3% of portfolio per trade. Strategy 3. Long-term holder. 2026 bull run. Dollar cost average Bitcoin weekly at .85090. Stop if closes below 80.0. Target 150.0, 180.0 by Q4 2026. Accumulate Ethereum at 2,500 to 800. Stop if closes below 2,400. Target 6,080. 10% in physical gold as portfolio insurance. Conclusion: crypto is in fear mode, metals are in euphoria mode, and macroeconomics is a powder keg. The Trump-Fed conflict and Canada trade war aren't just noise, they're fundamental shifts in global finance. Short term, expect more volatility. Bitcoin could test 84.0, Ethereum to 400. Medium term, if the Fed cuts rates in March, 50% probability, crypto will explode. Until then, range bound. BTC.80, 0.95, 0, ETH, 2,500, 3,200. Long term, the Bitcoin Suisse forecast of 180, 0 BTC and 80 ETH remains realistic under global economic acceleration and Fed easing. Final thought: every crisis is an opportunity. This geopolitical storm could be the catalyst for Bitcoin at 180, 0 and gold at 6.0. But remember, not every prediction ends up in your wallet. Stay sharp, manage risk, and never invest more than you can afford to lose. Drop a comment. Do you think Trump will crash crypto or boost it? Smash like if you want part 2 on how to trade metals crypto pairs. Subscribe with notifications in this market. Missing one day means missing a 50% move. See you in the next one, Crypto Crew.